Here's what I think you will get after watching this episode. First, I think a basic understanding of the impact of a Bitcoin halving and why this narrative is going to push the markets towards highs we've not seen before. Secondly, you'll understand the key concepts of when you should be getting out of the markets. And finally, you'll become a better trader and investor after watching this video, as it has all the information surrounding the Bitcoin halving which you need to succeed in the upcoming bull cycle. This is the second episode of Finance Forward, a podcast designed for you to establish financial freedom through all the experience and knowledge I've gathered in being in crypto for more than 7 years. It's one of the biggest events in the crypto cycle. It's always marking a massive trigger for strength, which is the Bitcoin halving. In 2012, Bitcoin's price was $10. In 2016, Bitcoin's price rallied to $500, reaching $10,000 in 2020 and reaching $70,000 in 2024, approaching Bitcoin's halving. A large return on investment for people within the Bitcoin ecosystem, but the more important part is that there is a bull cycle after every Bitcoin halving, and more importantly, an altcoin rally has started after every Bitcoin halving. I've experienced multiple Bitcoin halvings, and in this video I'll explain my view on diminishing returns, expectations on the potential peak of Bitcoin, and my game plan for holding my Bitcoin through this cycle. The name of the podcast has changed to Finance Forward, which will be a weekly podcast where I'll be sharing all the experiences and knowledge I wish I had when I started trading in the cryptocurrencies. This will also include guest interviews in the coming period, but slowly we'll be continuing to increase the actual content of this show. Before we dive into today's content, I want to share a new product to you. We have been working extensively on creating the best content on this YouTube channel. We've also created a Crypto 101 course in 2023, and the long wait is finally over. The Trading 101 course is going to go live in 1 week. The Trading 101 course is an advanced course of everything that I discuss on YouTube. It's surrounding risk management, portfolio management, trading and buying altcoins, but also the essential parts behind knowing how to use technical analysis and how to optimally build your trades. Rounding off with my personal strategy and my personal learnings that I've had from the previous cycles and the returns that I've made during those periods. That's why we are giving 50 people the ultimate chance to be buying into this course for a lower price than what we're going to ask for it. So become one of the first 50, and by doing so you can find all the information in the description beneath. Also, I'd like to make an agreement with you. If you subscribe to this YouTube channel beneath, I'll make sure that I'll continue to increase the quality of the video and the content as much as I can, and I can share that there are some very cool things coming around. The second Finance Forward is here for you today, but there will be more exciting additions coming up, a new production, fresh content, revamped studio, all designed to support the journey we have to create a stable future with more financial freedom. In that regard, I'd like to share that I've been mentioning about our consultancy. Due to your enormous interest, we are currently full. We are a boutique firm and have a personalized approach in which quality is more important than quantity, through which we'd like to make an impact on everyone being part of our group. However, you can still provide your interest through our website via the link beneath, where you will be becoming the first one to be served when you are expanding your interest into us. Additionally, at this very moment, we are looking to expand our team. Our vacancies are live, which you'll be able to find on our website. We're looking for many different team members into our team, so make sure to keep an eye on the website. We'll be discussing everything in this video surrounding holding a portfolio on Bitcoin and crypto. The important factors are the impact of the Bitcoin halving onto your portfolio, where can Bitcoin run to, and how can you position yourself into the markets. All aspects of the upcoming video. Let's get started. first we need to look at some general topics that are a concern in the markets. And we have seen that some topics are important and have been causing some momentum, positive or negative, in the markets, which is Solana. Solana has been getting a lot of momentum with the meme coins taking place, but Solana is also having a lot of negative momentum because the actual chain simply doesn't work entirely or doesn't work as a conclusion. There's more than 75% of the transactions that have been failing, which is a growing concern, and some of the actual developers are saying that Solana can just not handle everything. So this is one of the big concerns. This congestion has been taking place for a substantial period of time, through which as a solution Solana is still is losing value at this point, but at least Solana has been losing momentum. And there was this conclusion that was saying that there is too much demand. So what you see happening in the markets currently is the fact that Solana is taking all the retail money. So everyone that has been trading on the crypto markets have been moving towards Solana to actually trade on there and to trade meme coins, because in itself Solana the rest of the markets have not been getting any return at all. Solana is, Bitcoin is, and that's basically it. So the rotation has been happening towards Solana, and because of everyone jumping on the hype, it resulted into Solana being congested or simply not working at all, through which more than 70% has been getting into a situation of failing as a transaction. They are looking to deploy a fix on April the 15th, which means that 2 weeks are not going to be, or close to 2 weeks of not all the transactions to be continuing. But this is an ultimate relation to, as it's called here, failure of success, which means that there is so much growth happening within the Solana ecosystem, which as a result has been getting into a case of the high levels of failure at this point. But this is also something which we have been seeing in the previous cycles, and this is also why I think that big entities and corporates are simply not going to be moving towards Solana, but they want to find a secure blockchain, which I think is Ethereum as a whole. So that's why I still think that the Ethereum ecosystem is one to invest in. Now, there's also the case of the Bitcoin halving happening at this point, and there's also the case of Ethereum, which is potentially going to get an Ethereum ETF. Now, I want to highlight this part in which, of course, the overall interest is into the Bitcoin ETF, the Bitcoin spot ETF, but the interest is also changing towards Ethereum slowly but surely, which means that crypto natives are selling their Ethereum towards Bitcoin, but also institutionals are looking to get into Ethereum as one of the blue chips that are out there, which means that the interest into the Ethereum is not that much yet, but it will be because of two things that are happening, which is the Bitcoin halving and the ETF, and Solana as a blockchain that has been working as a retail blockchain at this point. Now, what do you need to look at in order to get an actual view? You need to look at the fundamental backgrounds, which is in this case Ethereum building continuously to be a compliant, secure, scalable blockchain to do the settlements on, which is actually happening, but it's taking a long time, through which you can see that Denkun has been happening on the Ethereum blockchain, which means that layer 2s and layer 3s are progressing, and layer 2s and layer 3s are actually able to facilitate RWA, DeFi and NFT growth. And then the blockchain actually becomes modular, which means that you can actually add other crypto blockchains towards it to actually build an ecosystem that we want to have. But it's not as fancy enough as most of the retail traders are looking at this point. So that's why you don't see price accelerating, but you do see fundamental growth, because more and more RWA and DeFi projects are moving towards Ethereum, but there's simply no hype yet. There's also Deepin being built on top of Ethereum. So that is just taking some time. And there's still a case that we most likely are going to get, or likely are going to get, an ETF. The chances are super low, and because of the chances being super low, and because of the SEC fighting all these entities, or actually Ethereum Foundation and Uniswap, you can conclude that the sentiment is super bearish when it comes to Ethereum, but fundamentally it is still super strong. In that regard, you can also see that the Ethereum price action is still super bearish, right? So we've had this bullish divergence. It signaled continuation, so we can see that we see the upwards move resulting into strength of the actual blockchain in terms of price. In January, around the ETF launch of Bitcoin, the predictions were that Ethereum was going to get one. So we actually see that if there is an approval, there is a very substantial move going to be happening on the price action of Ethereum. But then you can see the clear rejections taking place, through which after that price action started to continue falling, in which we are currently having a new cycle low happening on Ethereum against Bitcoin, in line with the current bearish sentiment around the actual ETF or around Ethereum, as everybody is moving towards Solana. Now, the ETF in itself has also slowed down, as we can see that the inflow has not been as much as we wanted. So technically speaking, since the 8th of April until the 11th of April, there is an outflow, and most of the outflow is still being caused by Grayscale, as Grayscale is currently showing the negative numbers, and the amount of Bitcoin flowing out of Grayscale is massive, which means that we are getting close to a level of being final with Grayscale. So the impact of the outflow is going to decrease over time. And then there is still the case of, are we going to get a rotation from Bitcoin towards altcoins, or is Bitcoin going to continue? At this point, Bitcoin is just consolidating, which means that if the inflow is going to pick up, and we've seen gold showing a lot of strength with the all-time highs, if the inflow is going to pick up momentum, it is very likely going to provide a continuation of momentum on the price action of Bitcoin. So the inflow is stabilizing, stagnating, price is consolidating for almost a month at this point, before we can actually see some more momentum coming in. Now, when we look at the price action of Bitcoin, it's still stuck in a range, and we're still pre-halving, which means that pre-halving we likely are going to have a peak, which means that I think that we're going to end off around this area, take the liquidity above this recent all-time high, and then rotate back in, which is most likely going to cause strength on the altcoin markets. But overall, the upwards momentum is still heavily there. It's crucial to break through 72k. If that level breaks, it is very likely going to cause a continuation on the strength of Bitcoin. If we reverse, then the conclusion can be clearly be drawn that the momentum for Bitcoin is ending at this point. What we do know is that Bitcoin is stuck within this range, and as it is stuck within this range, there's not much of momentum to be discussed. But what can we expect in terms of Bitcoin halving price prediction, and what can we expect after the Bitcoin halving? That's what we're going to be discussing after this part. As we want to discuss the Bitcoin halving, I think there are some important discussions that we need to have together to make sure that we understand everything correctly. First of all, everything is based surrounding liquidity and inflation. And if you have an asset that is scarce, like Bitcoin is, and the other nominator in this case, or the other asset that we actually value Bitcoin is the US dollar, and the liquidity is going to exceed through high levels, it means that one of the two is going to increase in price, right? So if the inflation on Bitcoin is going to drop and the demand into that one is going to be substantial, it means that the price of Bitcoin is going to rally. But on the other hand, if we have the inflation on the dollar being substantial, but also the amount of dollar being printed is going to go through the roof, it means that the value of the dollar is going to be low, which means Bitcoin goes up. Super simple, right? So what do we want to discuss is that first, around the Bitcoin halving, it is a super important event that we need to look at, which means that because of the high levels of inflation that there are in the regular world, the price of Bitcoin is going to go through the roof, because by having such a high inflation in the normal world, you will see that there is a higher interest into an asset that is called Bitcoin, because your purchasing power is going to lose over time. In this regard, if we look at the inflation data, and if we look at the graph, we can actually see that the inflation of crypto or the inflation of the US dollar has been going through the roof, in which a period of strength has been seen on Bitcoin during this period. Weakness during high inflationary parts, but that is now quickly pacing up because the amount of money that needs to be printed is going through the roof again. So inflation is predicted to be around 2% on a yearly basis. That is going to deduct your purchasing power over time as well. But the inflation has been going through 9% and actually way higher than that, but it's not reflected into the data. So the inflation in the US dollar is super high, but the overall supply in the Bitcoin is going to decrease over time, which means that there is a substantial interest. And that's why I brought up this chart, which is if you had $1 in 2020, you can buy one McDonald's coffee. But if you had $1 in 1971, you would have been buying 17 oranges, which is currently costing you $6.40. Same goes for 20 bottles of Coca-Cola during 1944. It would cost you $1 back then, but it will cost you 15 bucks right now. I think even higher. And if you go back to 1913, you can see that the Hershey's chocolate bars, or 30 of them, were costing you $1, and now it's $26. So this means that over time your purchasing power is decreasing. Also, if you have a regular job, it is not being corrected by the actual inflation, which means that your purchasing power is diminishing over time. And we're getting into a period that the middle class is not going to accept it anymore. But if we keep on printing, then the purchasing power goes down. And the only asset that is providing an actual return at this point, that is Bitcoin. So what do we see here? That is just reality, which means that at this point, the halving of Bitcoin has such a magnitude of impact into everyone, because if we look at the real data and if we look at the real inflation, stocks have been yielding a return, but the actual return is made in crypto if you compare it to what's the actual realized inflation. And if you look at the overall liquidity that has been added, and the increase, and you think of the amount of liquidity being added into the system is the real inflation that's being caused into the system, then if you have the amount of liquidity that has been added into the system and you look at the entire return of the S&P during the exact same time, it is flat, which means that by holding S&P at this point, there's no real return being made, but you're better off than people not having the actual stock. So there's a network effect of having it, because if you're not having it, you go down into, or like you're likely going down in terms of your standard of your living standard. Now, if you have Bitcoin or Ethereum, those are the only assets that have been outperforming the liquidity level, through which that is the asset that you need to be into, especially with the scarce concept behind it. And that's why the Bitcoin halving is super important to realize or to understand. The Bitcoin hash rate is also going through the roof at this point. So aside from the investment perspective, there's also the technical perspective, which is that the technical perspective leads to a lot more security within the Bitcoin ecosystem. And as we can see, the hash rate has been going through the roof substantially. And even this is an old chart. It has been going up even more. Now, this is another representation. The Federal Reserve wants to have an inflation rate of 2%. However, the true rate is significantly higher. Perhaps even 15 or 20% at this point, given the amount of liquidity being added. If you add around 20% on a yearly basis, then it seems very likely that your inflation rate is generally also 20% and not the 2% as they say there is. So when we look at the inflation on Bitcoin, it's looking a way lower than the dollar at this point. But that means that at this point, if we continue to keep on printing, this has a huge impact. At some point, the bubble will pop, and then the actual price levels of Bitcoin are going to drop as well. But then liquidity is also going to drop. So if, for instance, if you have a certain number of liquidity at this point and Bitcoin is being priced into that actual liquidity, if liquidity goes up by 50% and you think that that is the actual inflation and Bitcoin goes up by 100%, you're outperforming, so you're increasing your wealth. Now, if the deflationary principle is going to happen at some point and the liquidity is dropping by 50%, and Bitcoin drops by 50%, you're still on the same level, so it doesn't matter that much. That's the whole concept of understanding liquidity in the markets. Now, this is an important one because over time, the amount of Bitcoin being provided to the markets is reducing, which means that there is a high demand at this point into an asset that is scarce. There is a low supply. And that's why the price of Bitcoin is going to go through the roof, especially since we can see that at this point, the ETF inflow is enormous and it's way higher than the Bitcoin supply. And it's even going to be way higher than the Bitcoin supply after the halving takes place. So the supply shock is going to induce a larger flywheel for this cycle to induce way higher prices of the markets as a whole. Why is that? Well, let's assume that there is a certain amount of supply being available on the markets, that if you buy for 1 million into the Bitcoin, or you buy for 1 million USD in terms of Bitcoin, then if you do the purchase of 1 million, this means that there is a certain impact into the market capitalization of Bitcoin. The lower the supply is, but the higher the demand, the larger the shock will be. So at this point, you could say that if you buy into the Bitcoin market cap, then 1 million can deal with 20x in terms of market capitalization. But at some point when the supply is going to decrease, you can suggest that it could be a 50 to even 60x, which means that if you have ETF inflow of 1 billion, then the impact is going to be 50 to 60 billion or even more, which means that at this point you basically get a vertical in terms of price action until you reach the level that the marginal impact is going to be decreasing, and that is what we reach at some point during this cycle. Then another one that I had here, which was the hash rate. Again, hash rate is going through the roof. The Bitcoin halving is also pushing the mining innovation further, which means that the miners are going to innovate and are going to get a return, of course, but the cost of mining 1 Bitcoin is going to increase, which also means that the hash rate is going through the roof and therefore it becomes more secure. Now, the Bitcoin stock to flow model is still intact, which means that in this chart, as you can see, we are still following the 4-year cycle. It seems very likely that we still continue to do so, but I think we're going to have a lengthened cycle. But overall, you can see that it's still facing reality, and the stock to flow model has been providing some good returns in the previous cycle. So from here, from the halving, the Bitcoin price went 6x. From the halving here, we have seen a 20x, and from here, I think it was even way higher. And at this point, the question is, how hard can we go during this cycle, which is what we're going to be discussing in the next chapter. Our mission is to provide you all with a financially stable future through crypto. When I started, I felt overwhelmed and it was hard to find the right information on the markets or to keep up with the latest news. That's why we decided to create the Crypto 101 course. Once you start building your own portfolio, it's a must to know everything surrounding the cryptocurrency markets. What is Bitcoin? What is Ethereum? What does DeFi do? And even more. A fundamental background gives you a lot of information to be able to investigate potential business opportunities. Alongside with that, it's a must to know how you should be balancing and building your portfolio, what technical analysis means, and how your portfolio can be secured. In the Crypto 101 course, I'll be guiding you through an 8-hour course through all the fundamental first steps of understanding the markets, building portfolios, reading charts, and mindset. It's a course that I wish I had when I started, and it's designed for you to lower your beginner mistakes. Click on the link in the description below to see what the course consists of, and make sure to reach out through our email if you have any questions. So in order to get a proper price prediction, I think there are a few important parts to realize. This cycle is a little bit different than the previous cycle, which is that there is a huge amount of institutions being into the crypto markets, investing through the ETF, implying a lot of liquidity into the market, which means that you need to be aware of that, right? So that is also why the Bitcoin price action has been resulting into a new all-time high before the halving. Now, what can we expect from that part? As long as the liquidity starts to increase and as long as the bubble doesn't pop, Bitcoin is going to go through the roof, which means that there is an unlimited level that we can go to. But there is a crossroad at some point where inflation is just too high and we cannot continue with the entire cycle, and that's when the entire world reserve currency US dollar is going to collapse. End of story. But you can see that overall the balance sheet of the Fed has been going through the roof. This has actually been inducing a lot of strength into the markets, as we know, so much free money getting into the markets. Now, the balance sheet is being reduced at this point, but they need to continue printing to actually pay their own debt and pay their own interest rates, making sure that they can continue going with this entire program. So the 4-year cycle is still making sense at this point when we're looking at the charts. The 4-year cycle is still making sense, but I want to discuss a few important parts to actually ensure that we get to a proper price prediction. First of all, the returns have been diminishing over time, all right? So we have been seeing a diminishing return in which this is a 100x. I think here we've seen a 29x, and here we've seen a result of 7x. So it's very unlikely that we're going to have a 30x in this cycle. If we have, then we're completely screwed. But there's also a conclusion that in this cycle, FTX has been continuing to push back the price of Bitcoin. The collapse of FTX has been taking place. So there is an actual argument to be made that this could have been going higher. And to be fair, the diminishing returns debate is based on N is 3. So the sample size is super small. There is a concern that, okay, by the expansion of Bitcoin and the amount of liquidity, of course, at some point it's going to be going more flat. That's making a lot of sense. But if you look at the overall perspective at this point, you can say that last cycle we didn't have too many new participants joining into the markets. This cycle we've got the ETF inflow. We also know that the significant impact of every purchase is going to increase over time, especially through the Bitcoin halving, as there is going to be a lower supply on the markets. And because there is a lower supply on the markets and there's still a high demand, the supply shock is going to increase and the markets are going to push further up. Then there is also the case of the 4-year cycle going to be erased because miners are going to make money through transaction fees rather than actually mining Bitcoins. And then secondly, the impact of macroeconomic is going to be increased by the amount of participants joining into the markets and by the amount of significance of Bitcoin, through which I think that the 4-year cycle is going to decrease over time by marginal impact. So I think this is the last one. Honestly, I think we're going to get a longer cycle overall, which means that also the number of where Bitcoin can go to is going to be higher than we were expecting it to go to. So last one, we had a 6x. If we had, we ran to 100x or 150x, you would have had a 12x. It's all whatever. In terms of size, where we can go to for this cycle, if we have diminishing returns, you would conclude that the max is around 500k. I would be happy with it. Then we also know that the amount of money that's going to be implied into Bitcoin at this point from the ETF is around 200 billion expected. That would be adding around 4 to 6 trillion or maybe more into the market cap. That is another 4x from the current price action, so we're halfway there, and that is just the US. So I think, to be quite fair in terms of price action and price prediction, I think we are into the super cycle, which is, if you compare this current cycle to any of the previous cycles, I think the comparison you need to do is that you need to compare it towards 2017 with a lot of new technology into the markets. And I think this cycle is going to be concerned around DeFi, RWA, DePIN, all those things. So that is why I think it's going to be a super cycle. And we are currently into the case of the .com bubble type cycle for Bitcoin, which means that I think that based on that, the adoption is going to grow, but also the overall interest into crypto as an alternative for the financial system is going to grow significantly. Where do we go? I think that if you calculate it in such a way and you say that there is a case of diminishing returns, it is not making sense at all. Diminishing returns would also be applied to anything related into a tech stock. Well, if you look at it from a perspective of Amazon, for instance, this is not really looking at a diminishing return part, right? It is just gradually continuous upwards momentum. So the entire saga surrounding diminishing returns is a farce to me. Honestly, I think that this cycle is going to bring the Bitcoin price action towards a level of anywhere. If you think at the .com bubble and if you look at the data around that one, it was around 15 trillion. All right, the total market cap for Bitcoin is currently at 2.5, which means that you're going to imply that we can still do another 6x from here, which is a calculation that Bitcoin is going to go to around 500k. If you calculate that return from that period and the valuation of then to now, you would suggest that the market cap can go to 30 to 35 trillion. And given the influx of institutions and given the influx of the Ethereum ETF and stuff, I think that there is a very likely case to say that Bitcoin is just on the edge of a start of a bull cycle, and that this cycle is going to peak anywhere above 500k, anywhere between 500 to 800k. And your optimal goal in this cycle is to keep your Bitcoin, and actually in the next bear market the exact same, but keeping your Bitcoin and making more Bitcoin by buying altcoins. And by buying altcoins, you need to be buying them at this actual moment because the rotation is still going to happen. So what happens in every halving cycle? Bitcoin halving takes place, the momentum slows down, rotation towards altcoins. Altcoin bull market starts to kick off. Actually, in the previous cycles, the bull market started to kick off months prior. But at this point, the actual kickoff is going to happen very close to the Bitcoin halving. And from there, you will start to see a high return. But those returns of altcoins need to be adjusted towards Bitcoin. Next update, I'll be talking about the actual altcoins that I'll be buying on the Bitcoin halving, my top 5. I hope you have been enjoying this relatively short update as I'll be traveling towards Dubai for token 2049. Thank you very much for watching.